Hello, good morning, good morning. So I'm waiting for a sell, but I would like to see price create some kind of support here and then look for a sell towards the downside. 5 minute, we're coming towards an SMA there on that 8 SMA. Could act as a form of psychological support. We're about to get the new hourly candlestick open up here as well. 5 minutes about to close in about 30 seconds. So I am going to be waiting for some kind of like additional confirmation. But I want to see a sell over here. We got clean range down towards this next support area by like 49.04. So I think overall, that'll be a pretty good idea. Let's see. Hopefully this candlestick just doesn't rip down because we're about to get the new hourly open. With new hourly open, sometimes you can just get like that volume and it'll just push through it. Like that. See, new hourly opens, creating a top wick. It would be nice to get some kind of a support to be formed before we start heading down. It's also going to be a reversal play over here from this area, so it's trapped. So potential buyers in the market. We have very clean range on the left hand side. This could be that reversal play. So if it re-breaks the lows, potentially start to head down again. See how this candlestick is gonna close. It'd be nice to get a strong bullish closure. At least on that one. Alright, I would say that's decent enough. Once we start re-breaking on the 5 minute here, price should be able to come down. It'll get through that SMA. Here on the 8 minute, re-break the lows to continue push down here. Trend is currently bearish as well. As you can see, loads of bearish momentum towards the downside here currently. Oh, pushing up. Don't want to go down. That kiss of death is still holding. Right underneath the 5 minute right over here. Ooh, candle skyrocketing. All right, so it looks like it's breaking the opposite direction. So that's why we wanted to see like this, basically. But looks like we're going the other direction. That would have been nice right there, like a break like that. That would have been the trade right there. Pretty nice, clean 30 pips. So yeah, that's it, man. Like now we gotta wait. Now we just gotta sit on our hands and see what happens. Maybe it's gonna come back down here, create like some kind of resistance, maybe give us a fake out situation, and then use this as some kind of a confluence. Yeah, but that would have been lovely. It's trying to push up. I hope today's not gonna be like Monday, where we also had that clean range and price was just pulling up. Just doing the, if you notice the price action, not on, was it Monday? Yeah, I think it was yesterday. Like the small liquidity grabs, this price is trying to move up. Here, here, maybe just slightly right over there. And it's trying to push up. It's trying to fill up this range. So quite interesting London session we're getting this week so far. This is the same price action we had yesterday. It's trying to fill up this range from the dump yesterday. Today is going to be Chinese New Year. So that's also playing a role in why we're seeing so much selling on gold apparently here. So gold prices tumble below $5,000 as China holiday dent support. The decline came as a Lunar New Year holiday kicked off, which means those buyers are not around to store up those assets. The move highlights the importance of Asian and especially Chinese demand, which helped propel prices higher in recent months. $15 minute is a hammer. Still kind of hopeful like price will come down. But it's doing a break and a retest. Breaking and retest our accumulation. Went back in, see if there's any orders in there. Went to fetch some more orders inside of this range. So came in, got some orders in, and now it's moving up. Now it's attempting to move up. Oh, nice. German 40 here had a pretty good breakout. Look at that. Where did we even come? We got some kind of big zone over here. Let's see. That's probably a what, daily? Or is that weekly? It's a break and a retest. This is basically what gold is doing right now. It came back in to on the 1 minute to get some more orders, and you can see that push up. Same thing that just happened in German 40. That's why I mean, like, it doesn't matter if you trade the higher time frame or lower time frame. Price action is price action. If you can read candles, you can read candles. There's no time frame which is safer. This is the weekly chart, and I'm showing here on gold is the 1 minute chart. It's the same thing. Candles are candles. Little breakout, boom, retest of that region, breakout, retest of that region, and now we're just watching to see what price is. This looks like it was coming down. This looks like it's coming down as well currently right now. But yeah, there's nice little play here on German 40 this morning. Break off of that support area over here. Little distribution to the upside. That is currently in a distribution phase right now. It's pushed up quite nice already from this area. So yeah, I think that was an awesome trade. Anybody who caught that trade? That's pretty good. So yeah, let's see what Goldie cooks up here. Maybe I could get like a sell. Maybe we can set up another version of that reversal play up here. The same one we're looking for over here. It could be the same thing that sets up like literally right over here as well, and then come back into this area. Look for a sell continuation. Because daily bias is still like 1.40%. Bearish on the daily. So it could set like a mini version of this right over here. So I'll be waiting for a few more candlestick closes, and then yeah, then we're gonna have a pretty good idea here what we're gonna do. Good morning everybody. Hope you all are doing well. Locked in. What a trade this morning. Oh, yes. Oh, yeah. And the idea was that price was going to fill this range as well. As I was taking, I was like, okay, you know, we've spoken about this quite a lot of times before. Like, you got entries earlier, and then we have resistance. Break above resistance should be a good running opportunity all the way up there. But obviously, we don't need that much of a move. It was nice to see volume came in. We got liquidity grab confluence below 48.87 over here. 8 SMA confluence, accumulation breakout. Yeah, all of these things lined up quite nicely over there. And then there was volume. Key ingredient there is volume. But look at this. We're kind of like some kind of head and shoulders. Left shoulder, head, right shoulder. It's coming downtown. Should we get ready for our positions again? Let me see. Why are you doing this to me, Goldie? I don't want to draw the short position again, so I'm just going back. Alright, let's see. Put this here. I don't know if that's still valid. But we just gotta wait for another setup. Probably you have to wait for another move. Damn, probably wait for another move, eh? Wait for it to set up again. Ooh, what a long wick. It's left over here. Took a loss at NQ, then didn't take a winning trade up. Went into buys a little too soon, but I had a confirmation. I think better wait for more setup, more structure. Yes, I think that would be the best thing, because I feel like this one already played out. Like it pushed around 44 pips. So if it was hanging around here still, then yeah, maybe take it. Yeah, please don't spam the chat. I'm gonna have to put this guy in a timeout. Hey, good morning, Illist. I feel like this thing's ripping up, chat. Like it's literally the same thing that happened in London yesterday. It's just trying to go up bullish. It's trickling. It's doing that trickle effect. You see? It's just slowly moving up the range. So annoying, because it's like we want to take sells and we would take like good sells. If it wanted to move up, it would be much nicer if it just moved up and got it over with. But this is the worst. Because you take a buy, you get the pullback. You take the sell, you get the liquidity grab. Take a buy, pullback, sell, liquidity grab. Buy, pullback, sell, liquidity grab. Gold is down by 2.02%. That was news from earlier. Gold falls on possible position adjustments before US-Iran talks. Yeah, I gotta pay attention to those. US-Iran talks. Let's say that whole Obama thing was just a distraction. That video on Twitter where Trump tweeted, or somebody tweeted like Obama and Michelle as animals. Apparently it's like all these things happening are just all distractions from what's the talks here, US-Iran. But you gotta pay close attention to this, because I believe this is the next catalyst. This is the next thing that will be in the near term future, like pushing gold. This is what we're possibly gonna be looking at here, because we still have time for the we still got time for the oh, where's my thing? We still got time for the rate decisions by June, July. So between now and then, probably gonna be one of them. Any tangible de-escalation could redirect flows towards risk assets and temper safe haven demand. The CEO and asset manager says, okay, also expect the talks between Russia and Ukraine have created tentative hopes of progress, even as hostilities continue. Yeah, and Goldie is still trying to pull up, but it's gonna pull. The next candle, see, this is that thing. The next candle, maybe it's gonna pull down again. So you look for a buy here, it's gonna pull back just like it did so many times before here. You see it create a new high. All right, so at least that one like distributed nicely. It's a nice little shotgun entry right here, pushed around like 84 pips. Boom. But then every time it create a high, it pulls down. Create a high, pulls down. But at least like when it creates a high, it's doing with like loads of volume, right? At least we can see like about 40 pips on that one. This one was quite small. How many pips is that? Really small. Boom. This one was fairly big enough, about 37. This one right over here, that's about 31. So at least it's giving some kind of pips, but overall behavior is just not ideal. Oh, what happened over here? We got completely dead volume. Shortly before we had market close. Look at this. Maybe this is Chinese players getting out, getting ready for the Chinese New Year. So look at the way volume just died out. Right there. Nice little breakout, little correction. Here to move up. Boom, fizzled out. Created another opportunity. Sell off during the Asia session happened right here. Right by the market open. Yeah, so let's see. I'm still keen for sells if we can get something interesting cook up. I wish it was like right here. Right here would have been nice. Right here. If this candlestick just continue to follow through towards the downside, that would be nice. Get the next candlestick open up. Actually, that would have to create like a support. Then get the next candle. Melt. Correct that range. That would have been the play. But now we just got a candle close above resistance, creating another shotgun opportunity over here. See candlestick close above, little shotgun entry. Break of the highs by 49.30, but yeah, it's gonna be still moving up over there. Look at the struggle of buys in comparison to sells. Yeah, but this is old news though. This is yeah, but for sure we're moving down. But this is because we're trying to catch a trade. But yeah, I get it. I get it. The sells look clean, and that's what I'm trying to catch as well. That continuation. But it's just for this session, this specific area is just giving the sellers a bit of a hard time. Sometimes this is like a Trojan horse. So you see like all these supports which are being formed over here. That's so much liquidity sitting below. And then all of a sudden, you may start to see like a candlestick do something like that and just mop up that area. And then it will look obvious that like it's some kind of a continuation at that point. It will look like it's continuing from this bearish momentum. So sometimes it's kind of like a trick. But, you know, the same thing happened yesterday. It was just trickling up. Like this. So, yeah, we gotta see now. Your broker and trading view feeds went down. Don't know what happened. Where's Archie out drunk? Yeah, it's probably on a bender. See what's cooking up. Goldie, what's cooking up? Low volume. 1 minute candles are slowing down slightly. Damn, German 40 breakout was clean. Steezy. Small liquidity grab down here as well. Took out the lows. Boom, boom, boom. Clean range. It's clean range on the 5 minute pause. Oh, on the higher 15, 30. Right up towards resistance point right there. I like German 40. Like compared to NQ, I think I prefer the German 40. Yeah, NQ is still... NQ played out the same German 40 trade. But I don't know, man. Something about this pair. Some of this pair I don't trust. I feel like the European markets are a little bit nicer to trade for some reason. I've always gravitated towards London session and Frankfurt Open, and you know, pound pairs. If anything, trade pound as a base currency, and yeah. I mean, the only thing I like here is gold. Gold moves beautifully, as you can see, even throughout the Asia, throughout the London. It's not based off really the New York session. Maybe like US 100 maybe is a little bit more. And the New York session is also a dirty session. You know, that's when we get all the red folders come in. That's when you get all the random tweets and all of that stuff. So I've always gravitated more towards like European markets, if anything. And just like gold. Gold is like Switzerland, you know. It doesn't really, if anything, gold's been moving more amazing during the Asia session than the main sessions, which is London and New York. Let's look at these like Asia session dumps over here. So hopefully today we can get that more of that follow through to the downside. Hope it's not like I hope it's not like yesterday's trickle. I have a bit of faith because the conditions today are slightly different with the Chinese New Year and all. Yesterday we had the bank holiday. But this session should trend. That's why I'm not looking for buys, because the London session is more of a trending session. It should continue the trend to the downside. We already had buys during pre-London. Right over here. That's why I wanted to see that a London rollover. Got my loss back. Now waiting for my love. German 40. I got the sell on NQ. Give us something nice, give us something nice. See, it's all waiting. Trading is all waiting. See, what was it? Yesterday's trade? Yesterday's trade, we didn't rush anything. I took a loss yesterday and I said, let me take a break. See this? Right over here. This is the power of waiting. So you take one trade, it's a losing trade, just wait. Just wait. Let the market do all that it's got to do over here. And then you see how clearer the direction and everything else starts to form later on when you come in later. Because now you're trading at a different market condition. See, this is all just moving up. There's a bit of choppiness. My trades weren't playing out. And I just waited. Just waited. You see now the environment changes. It slightly changes. And I still took the same sell. I was looking for a sell here. Still took the sell, same sell idea, because I was anticipating price to go down yesterday. Right? And then you give yourself a much better probability that you know you're gonna have like a winning trade. So I hope you can see this, the importance of waiting. You take one loss in one session, just wait, just see what the market's true hand is, right? So if it wanted to move up, it would have been a different story now if we're all the way up over here and we're still pushing up bullish, right? But you see, it didn't move up. So you just let it tell you it's time to say, okay, so I see actually not moving up. Create new, lower high, lower high, lower high, right? So this is the trend which is moving downwards. The market structure is moving downwards. Just wait for entry confirmations. It's like an early time, but this is pre-New York. So it's just the same way like London session. Or like London session, the early move on London session. You see this is the inception of that. And this is the pre-New York. This was the inception of the sell. Right over here. So it's a high volume time as well. So you just give yourself time in between sessions. I think you're gonna have a pretty good time. Okay, so I think it's setting up something here, chat. Like, this is kind of sneaking up on me a bit. Let me see. Let me make sure I lock in. Lock in, lock in, lock in. I think that should be on the 1 minute. It's dude. Okay, I also got that on the 1 minute. What do you think about this one, Ricardo? What do you think about this setup? Rate it from 1 to 10 or just generally? It would be nice if we created another support. I'm going based off this one right here. But man, I don't like that. I don't like it, but at the same time, it's like, I gotta take it because I don't take it. It is technically the play, but it's a different variation. It's a different variation of the play. It's not bad. I think I'm gonna have to take it. It's a B+ for you. You create like one more support down there. The worst part is if I don't take it and it plays out. Because it's technically the play. I'm gonna have to take it. Got that SMA right there as well. Flipping heck. Hope it doesn't bounce right off it. It's right at the entry. I feel like this candle is gonna break. So I will be getting in. I want to see a spike through that SMA. All right, I got in. All right, chat. Stop loss to break even. See if I can survive the pullback. Come on, dump it. Oh, stronger pullback. It stopped right at the wick. Right at the previous candle's wick. It's at TP. How is it stopping right at the TP? TP kind of got hit right there. It stopped right at the TP. Come on, Goldie. Stop playing with me. All right, chat. I'm securing right over here. Let's go.
Beautiful. Beautiful. Something close to genius.
Well, when he's around, you've always got a chance. Muchas gracias, afición. Este para vosotros.
All right, TP got hit. TP got hit. Had to secure right there. It was playing around a lot there, right, guys? Like, what the hell is this? It came like so close. Look at that. It's saying so close to that wick. It didn't break. It came to TP once. Stopped right at TP. It's like it just knows. It's like it just knows. It stopped right at this wick. It stopped right at TP. Went up. And then came down. Hit the TP quickly. Then went up again. Yeah, it's secured about, I think, shy of 20 pips over there. Maybe like 18 pips. Just a lot of fluctuation. But I just got a new 5-minute open here too. You see, I had to take it, chat. I told you. That was my play right there. That was my play right there. I had to take that move. At least it spiked through it again. Look at this volatility. It spiked through it again, but it's kind of hesitating a little bit. Told you, chat. That was a play right there. If I didn't take it, that would mess up the variables to the data. So even though if I didn't like it, I still had to take it, right? So you just gotta jump in. Like sometimes when you're afraid to jump, that's exactly the moment that you jump in. Otherwise, you spend your whole life in the same spot. And that is something that I cannot do. Gotta jump in. When you're afraid, that's when you do it. The moment that fear comes in, that's when you get in. That's when you do it. Just the same way when you're lying on your couch and the moment you feel that, oh, you know, I'm too lazy, that's the moment you got to jump in. You got to say, did I say I was going to go to the gym today? Did I say I was going to do this today? The moment that doubt creeps into your head, you got to jump in. Because your mind is designed to feel comfortable. You know, it's designed to make you feel comfortable. But that's the difference. That's when you have to step up. I hope people didn't hold it. Lol skyrocketed. Yes, sir. That was not even a holdy type of trade because you see the way it's like fluctuating a lot. Even gave them the chance to secure again right over here. It pushed around 27 pips. See, it's coming towards the tail end of those reversals. Like looking around 27, 20, 30 pips. Like the trade this morning was easier to hold, you know, because it was just like, it was not doing any of this nonsense. Okay, it went up. It came down into drawdown for a bit. And then it skyrocketed back up. So it's like a lot easier to hold on the attempt. But a little bit of fluctuation here today. That slightly different. You see, at least today it still gave the move because there's volume. Yesterday there was like some kind of a lack of volume. I think also that USD bank holiday caught up to gold spot. So it was not as forgiving. But yeah, right now it's pretty nice, pretty good trade. I still see it melting, possible V-shaped reversal. Yeah, I mean, like, I still see it melting too. It's just, it needs to get out of this rut. It's literally the same PA like yesterday. That trickle effect, it's the same trickle effect. It needs to get out of this rut over here. This won't be easy to catch because you see how strong the pullbacks are. Man, even yesterday, I thought I was going to get stopped out. Man, look at this. Look at this trade yesterday. Man, I thought I was going to get stopped out because I'm noticing this week there, we're getting like some pullbacks. So I took this sell and I'm like, okay, pullbacks are a bit difficult today. Like, because the pullbacks were so aggressive and then it just played out. Then it came back down. Like, okay, out of the woods and TP smashed. TP smashed. We did a little Trump dance over here. A little Trump dance in the Telegram. And then, you know, prices continue to melt. Continue to melt over there, and then I secured something. Still managed to end the day just slightly above 1%. And that was a move. And then this morning it was also like a pullback. Like price shot up first. I think I deleted the screenshots. Probably in my trash. Let me see. I can't. This is a lot of unorganized trash bin here. I don't think I can find it. There's a lot of junk in there. But yeah, same thing. Push, came back down, the pull back, and then it like pushed up again. And the second push was quite easy though. Very easy hold. Yeah, and then just took the sell over here now. So all in all, pretty good. Pretty good. It's just like, just be a bit cautious about those pullbacks. That's all I'm gonna say. It looks like it's coming down, but it needs to open up though. I still do believe it can come down too. Just think it needs to open. You see even how this candlestick went all the way up, but in the last few seconds, we just got a new 5-minute open. In the last few seconds, it just closed bearish like this after creating a strong top wick. And then now it's like still fluctuating. So ideally, you'd want to see candlestick boom, come down, and then start to open up again. Start to breathe a little bit more. That is what you want to see. PA has been funky this week. Yeah, it's been a bit funky. This is the type of weeks where it really pays to spread out your trades. Spread out your trades throughout the day, because you don't want to get caught in this choppiness. You see, that's the thing about trading. We're always preparing for these conditions, because either the detrimental conditions, it doesn't matter like on other times if price is just moving, because man, on some of these days price just kept moving and we're seeing such high daily percentage gains. But it doesn't matter those days, you know. It's just like what you're really accounting for with trading is these type of days. These type of days like are the ones which are gonna cause you a lot more pain. So even if markets are moving smooth and everything like that, you know, just enjoy it, take your trades, stay humble, stay 1 to 2 trades a day, and forget about it. Just remember that around the corner are those other days where it's more detrimental to you. Those days are going to be way more detrimental because a loss feels so much worse. Like I even see it on YouTube. You know, as I'm streaming over here, because we're streaming as a community, I feel that that feeling of like whenever somebody takes like a loss, it's like amplified, because you know we're doing this now as a community, and I can feel the vibe. Like you know, like no one likes to lose. I get it, but at the same time, that's the thing that kind of like creates that a lot of turmoil for you. It creates a lot of turmoil for a lot of traders. Even really good traders find themselves in situations where they keep digging themselves a bit deeper and deeper into the loss because of that emotion of losing. It's so strong, right? It's so strong. So that's why those days specifically, it doesn't matter if you've been performing well. When those days come about, those are the days that screw you. And the market just knows how to pick them. So you just got to be always patient and never feel FOMO. Right? Always just manage that that loss by coming back another session. And it does increase the odds, because you know, for the market, this is not really a lot of time. Like let's say from here to here, it's the time is for the market, it's not really a lot of time. It's like how the CIA or the FBI or you know, these government agencies, they know if they're trying to catch somebody, for them they know time will catch up, right? They know time will catch up. Time always does its magic. And if they're chasing you, they have more resources and stamina. They will eventually catch up to you. Correct? It's the same thing I love to say, like Warren Buffett says, put a cop car on anybody's tail, they're going to get a ticket eventually. If you just keep trailing them, they'll get a ticket. Don't care how good of a driver you are, you're most likely going to break a law, a rule. So it's the same kind of a mindset. They know they're going to get you, man. It's just all about time. Like when Jordan Belfort got caught, the Wolf of Wall Street, they knew they were going to get him. They always get them. It just takes time, and they use time to their advantage. So it's the same thing like in the market, you know. The market knows with time, it doesn't matter if you get away right now. That's okay, you know. You can have your fun, but it's going to get you. So that's what you're kind of like planning for. You're thinking so much more ahead that even the trades you're taking now, they're not going to affect the way you're going to feel. Because you know, like this is the way that I got to go so I can remain disciplined and move correctly. right? So we can be in this game for a long time. So don't trade for today, trade for, you know, your future self. That future self of you who's gonna show up to the chart one day, not feeling 100%, maybe a bit emotional. Trade for that version of yourself. So you gotta make it easier for that version of yourself. Because we all have two versions of ourselves. We have the weak version and we have the strong version in us all. The weak version is the one who's gonna lie on the couch and say, oh, you know, I just wanna not gym today. And then the strong version is supposed to come and pick you up and say, come on, John, we got this. Come on, man, get up. Get up. You know, that's the different version of you that's gonna help the other version of you out. So it's gonna say, hey, listen, man, we gotta be disciplined here. We told ourselves we're gonna take 1 or 2 trades. Which trades are more profitable for your strategy, base hits, or runners? I would say the breakouts are pretty good. They're my favorite, the breakouts. But also the shotgun plays are really nice as well, especially if they line up with the breakouts. See, last time we took a shotgun play was last week, Thursday. So shotguns are also quite nice. Because sometimes there's so much volume that you don't get even a breakout setup, but you get the shotgun play and you're pretty confident about the direction. So the only other way to get in is going to be based off the shotgun play. Still hesitating within this general region. It wiped out those previous sellers right over here. Remember, I'm not the only one taking these trades. The other market participants, I've been trading this system for such a long time now. There are people around the world who are somewhat trading like me. Not on YouTube, but just in general around the world. Because I've seen the way price loves it. It has very specific ways of reacting. Remember, this is my entry model. This is stuff that I cultivated on my own accord. I didn't have anybody give this to me. You know, so you're in a very privileged position to have this information given to you at this level. Because this is stuff I had to figure out on my own. I had so many mentors and none of them were pointing out the things that I'm teaching here today. Or the things I wanted to... the things that I think would have worked for me. They're not pointing it out, so I had to point it out myself over here. I see now I found some consistency in the way we trade TFX concepts. So it is very interesting to also see these other players in the lobby and how they react. Because right here what happened was, there's a few things that happened over here. Entry confirmation, first of all, was good. It wasn't the best. You can say B+, right? B+. So that's one hurdle you have to first get over. That's a first hurdle, is that psychology of now you got to execute, right? So it's the same thing, like people are going to struggle with their own strategies when it's a B+ or something they're not confident with. That's step 1. Step 2, how would you manage that pullback right over there? That's the next psychology. This was not the easiest trade. You see how it came? It tapped right to that entry, right to that T, high volume area. So we've spoken about this like so many times. Correct. We've spoken about these high volume areas so many times. We've drawn them out. We've seen those reactions. And then having price come down to almost break the wick. That's also another psychological thing. Right? Like how do you feel about that? Most people also get scared. Like this is all happening in a manner of like 3 minutes towards when it hit TP for the first time right over here. So it's either get out, break even right there, get scared out by this. And then when it hit TP over here, start pulling back up again. Let's say if you didn't manage to secure anything there. It pulled up, and also within that there's a small time frame of when people just close because they're afraid of that full reversal. But if you still were able to hold your nerve, then it comes back down to spike through that level like this. There's a lot that went on here because that was a high value area of a potential winning trade. And remember, we spoke about the market operates in windows. It's not always going to give you a window to make money like consistently. So you see how small that window of opportunity here was to when the reversal came in for this specific move. It's a pretty small window of opportunity before the reversal. And then you see how it like acts so aggressive now. It's like so choppy, and now it's acting a little bit more unpredictable. It was more predictable from the moment of entry right here, but you see now it's acting a lot more unpredictable. You can see with the swings and everything. Now it's just like shaking out. It's like a shark, you know, when the shark grabs onto something, it grabbed onto the guy over here, and it's like kind of like shaking him out. It's like shaking and shaking him. So it's still going in this direction, but it's like still trying to rip him apart. That's the market in a nutshell. That's what it's doing to you. It's doing what a shark would do to you in the ocean. It'll just fucking get you and try and rip you apart like that. Especially in these market conditions, at least so far this week. A little bit of sharky waters. So yeah, I think like trading should be treated as a craft, not as a get-rich-quick scheme. You have to put some respect onto it, and don't think, you know, it's just all about signals and Ferraris and all of these things. You know, that doesn't mean shit. If you look at a lot of profitable traders in Wall Street, they're not driving Uruses and Lamborghinis. These guys are living quite comfortable lives with family people. They're like family people. The people who drive the Lamborghinis and Ferraris are just the Instagrammers, right? It's just mostly this Instagram people, but that's not what trading is about. Let's see. Unless speculative sentiment reemerges decisively, the backup drop is likely to keep price action contained within relatively narrow ranges over the near term. Focus now turns to upcoming economic data, including US ADP, employment figures due Tuesday, and inflation readings from UK and Japan, which could spark bouts of regional volatility. But we don't have... Why is it saying we got ADP? We don't got ADP. We had ADP last week. What is this? Today we don't have any news. We got a few red folders, but no US dollar news. Tomorrow we got FOMC meeting minutes. That's gonna be quite important. We have unemployment claims on Thursday, and Friday we got... What do we got on Friday? Flash manufacturing, retail sales for the pound. It's about chasing excellency. I like that. Yeah, it's about really pushing yourself to... There's no other field I can think of where you gotta push yourself like this mentally. It's always you know, sometimes it can be quite... okay, the truth is, you can wait for the trades which are just the most easiest trades for you to take, but that also requires a lot of discipline and a lot of patience. But for the most part, yeah, it is something that you got to push yourself like psychologically every day. And you see, that's why I advocate for taking maybe like 1, maximum 3 trades a day. Because those types of decisions, they're so... You got to put so much thought before taking a trade that it's better that you just chase excellency in that sense. And make sure every position you take has some kind of a value, you know? Because it is quite a lot of effort. It's the hardest way to make easy money. Once I take the trade, I just monitor on MT5. Yeah, me too. I started doing that as well because TradingView is always lagging slightly. Once I enter, I monitor the P&L. I'm waiting for 49.50 on gold. 49.50. Oh, you're waiting for the range. Yeah, the range still has got to get cleared up here. You still have about 222 pips. Crazy. Like we just had this trade pushed down almost 30 pips. But it feels kind of small, right? But trust me, guys, like if you're new to trading, well, just for visual purposes, like a move like this, it's almost 30 pips, right? This is on our normal volume on gold. That same 30 pip move can look something similar like this candle, like a candle like this, like on a normal volume, right? It's just right now gold spot has loads of volume, but that's generally how a 30 pip move would move, like this. Most time people are happy to even secure around like 10 pips, because sometimes even these ranges are just about maybe even like 14 pips, like a range like that. Not specifically this one, but like in general, like a range that looks pretty good like this, we could be like about 14 pips even. So yeah, it's a really good market environment right now. Having a lot of market activity in, and that's the whole reason why we trade gold, is because this is gold. Let's see what else over here. Let's see how Bitcoin is doing. Daily time frame, BTC still setting up over here. We got some kind of an accumulation on BTC. It could see a recovery above 78.93. If we start breaking above, then that's what, 72, let's say 72k. If BTC breaks above 72k, we could see some slight bit of recovery. But right now it is definitely, it's gonna have to set up. I do imagine for the near-term future we're gonna have a lot of accumulation like this happening on Bitcoin right next to 60k. It's gonna have to set up, and if it wants to keep tumbling, it's gonna tumble below 60k. And some people already are waiting for this thing to come way lower, like even down to like 40k, so they can try and buy it back up again. And there are so many rumors around why BTC is moving down. Some people say it's because of Epstein, because apparently like Epstein was the creator of Bitcoin or something like that, and this is maybe his position, his securing positions over here. Oh, he's getting out of the market, which is, you know, like, I don't know if y'all have seen that image of the guy, but there's a picture of a guy who looks like Epstein surrounded by security guards living in Tel Aviv. So, you know, the guy was quite rich, quite powerful. So who knows if he truly died? Correct? Let me see if I can pull up that picture. And Bitcoin would be the place to put the money. He even broke down in an interview about fractionalized banking and how the whole banking system is basically a fugazi, and how if you could put $1 in a bank, the bank can make 9 more of those dollars. And he was explaining about fractional banking. But this is the image that they saw. Reports emerge: Jeffrey Epstein roaming the streets of Tel Aviv. We should go to Tel Aviv and just hang out by some restaurants on the side of the road and see if we're ever gonna see this guy. See a guy with this profile. Beard, long hair. Yeah, crypto is still definitely a nice place to store a currency if you don't want to use traditional banking, and it gives you more flexibility. That's how Andrew Tate still managed to stay rich and buy Bugattis even after all his court cases, right? That's the value of crypto. It's not to get rich, it's just for the rich to use as a tool, you know, and in the process they may get richer. Because, you know, price can go up, and it goes up with so much volatility. So they're already keeping a lot of money in there. So they can make they could make a lot more. But at the same time, they could lose a lot as well. Because, you see, this thing's tumbling quite a lot. We're close down to like 68k right now. I don't think gold is going to go back to 30 pip ranges. It doesn't feel, I feel like this could be the new normal. You know, it's like if you look at the world today, the world is just so volatile. There's never been a time closer we've ever been to nuclear war than we are today. So it could literally be the new normal. Especially with all these technological advances, and this is kind of like a cold war that's happening, you know, that we're not really seeing. So yeah, this could literally be the new normal. Pandemics are around the corner. They're gonna conjure up another COVID soon. Made a lot of money during that event. If Bill Gates could create viruses for Windows, what makes you think that we could not create viruses for world population and make money off of it? Anything that can be done at a small scale can be done at a bigger scale. It's just a matter of resources. So I'm pretty sure we're gonna have another event coming up soon. Then the markets are gonna be moving quite a lot again. Because you see, markets don't like not having events. You see what happens when there's no events. The markets die out. How do the rich make money? The markets die out when there's no events. So when markets die out, we gotta go give a country in the Middle East democracy, or we have to do something, right? We gotta do something. We gotta stimulate. You know? So I think this is the new norm. And it's, you know, for a day trader, it's perfect. As long as it respects price action, because it's still very forgiving, right? It's still very forgiving. Even with all that volatility, like you'll at least get you should be getting at least your 20, 30 pips. And then on the good trades, a lot more than that. So I think, you know, it's a pretty good time to be trading gold. Well, that's why I trade gold, because gold is more tied to the world, right? It's more tied to the world. It's a universal element. It comes from space, gold. What's NQ? Paper? The stock market? You know, like gold is tied to literally everything. So, man, this is, yeah, you gotta get good at trading gold, I would say. For those of you who are too focused on these other instruments, you gotta really put gold under your portfolio. I mean, even in the beginning of the year, we saw that Goldman Sachs and these hedge funds were urged to put like about, what was it, 10% of portfolio in gold spot. Imagine 10%. That's a lot of money for a hedge fund. You gotta learn how to trade gold. Don't trade NQ because ICT is trading NQ. You know, like, see where you're gonna make the money. You gotta follow the money. But you're never gonna go wrong with gold. Sometimes things like GJ, as you can see, we stopped trading GJ because GJ completely died out. Like mid 2025, GJ died out. It's a currency. It's forex, pound versus the yen, completely died out. You see, those ones are not as safe, but GJ is performing well now. But those are just not as safe and as consistent as something a bit, something like gold. So yeah, I think those are things you just have to consider when really choosing an instrument to lock into. And don't be afraid. People tell you, like, people are really afraid of gold online. It's really not bad. It's definitely a lot more respectful than even currency pairs like GBP, AUD, NZD, US dollar. Gold is a lot more respectful. It has some class. These other instruments don't really have that much class, in my opinion. I've traded them. I know this. They're not forgiving. They're quite Judas. A lot of Judas happens within them. I'm just saying this because I want to help somebody out there take that leap. You know, not everybody is gonna listen to me. I just need one person to listen to me. That's it. It's somebody to take that leap, because man, I had to take that leap myself, because my community just traded GJ until I found out that I needed to start trading gold. And I can tell you that gold, when I started trading gold, it changed my whole trajectory of how I was journaling, how I was seeing trades play out, and that sort of thing. But, you know, a lot of the time, people were going to put fears into you and say, oh, you know, gold's scary, too much volume on gold, blah, blah, blah. That's because they don't know how to trade it. That's not a reflection of reality. It's a reflection of their reality, not your reality. right? Now this is chopping up quite a lot. Look at this. Little bit of a sideways movement over here. Remember, gold is up like right now 100 and something % since the last 12 months. How much is gold? Gold. See, over the past month, gold price has risen 4.75%. Yeah, this is gonna become the range. So we got a range high right over here. We got a range low. How low can you go? I used to have a watch list of 10 forex pairs until learning here. Life is easier now. Forex. I think the biggest guy in forex is Mamba FX. Is a forex guy. I think Mamba FX, he used to be a really good trader, but now he's a really good marketer. Yeah, we got a range here. This range is around 158 pips, 150, 60 pips. Looking for price to maybe break above here, and then it's gonna move up. But right now it is accumulating. It's in an accumulation. Getting ready. Have you seen Alex G? Oh, it's streaking the Super Bowl? No. But he already did that once. I think what is this his second time? Second or third, right? Something like that. I think it's second time. Paid a fine. I don't paid a fine of what, 200k? His ticket was just about like 100k. So I saw little snippets of it, but I'm not gonna watch the full video. Again, Alex G, really good marketer. Do you know how many eyes are on the Super Bowl? To have a to sponsor your thing like that, whatever, I don't know what he did, but he probably sponsored something. It costs people a lot of money for advertisements. Same thing like advertise in Formula 1. To put a sticker on a car, I think costs like, depending on the location of the car, it can go up to $1 million. You know, so I think it's quite a smart move. But if you got to fine money of, you know, 100, 200k, then you're gonna streak the Super Bowl. If you don't have that kind of money, then it doesn't make sense. So it basically paid 100, 200k for... He should have... I saw a video about like Instagram. He should have run longer. I feel like I could run longer in the Super Bowl streak. That wouldn't catch me. And if I'm going to pay such a hefty fine, I'm going to make sure I get at least a minute of airtime. I maybe even try and sidestep one of the players, you know? And they'll be like, oh, damn, man, this civilian here. You got a civilian sidestepping NFL players. You know, but Alex G's he's kind of slow. He's kind of slow. He got caught quite fast, in my opinion. Also, the fact that you're banned from it, if you do that, now I think it's properly banned. Pay me 100k, I'll streak the next one with TFX on my chest. Hey, that's actually interesting. Just pay people to do it, people who are not yet banned. So even if you get banned, you can just have a bunch of people who keep doing it. That's a pretty good idea. You know, I was watching Snowfall the other day, and Franklin was like, for those of you who watch Snowfall, the series, Franklin was one of his players got caught. Basically, he sells cocaine in the projects in LA or something. But he started using miners, because now when miners get caught by the police, they don't have to face like serious consequences. So it's like, why don't we just get more miners? It's the same thing like with the Super Bowl. Why not just get more random people to streak it for you? But anyway, prices coming up over here. Gonna see if it breaks 49.30. 49.30, and then it's gonna try and move up towards 49.52 over there. You still got a very good chunk of this range left over, about 223 pips. World Cup would be more lucrative. True. Crypto helps a lot in withdrawals for retail. You can 20k USD in literally under 4 minutes. Obviously depends on your broker. USDT. Yeah, you can do that. Or you can get it off peer-to-peer trading as well. There's some peer-to-peer traders who will go up to their limits around just about 20k. I've only been trading gold since the beginning of 2025. Awesome. Keep trading it. His dad is rich? Who's dad? Oh, Mamba FX. A lot of people come from rich families. In the trading industry. I definitely don't, but I can see it. I can see through the fugazi for a lot of people. You know they're from rich families, but I guess, you know, you just have to have that kind of a skill set to see through the character with the information that's available. A lot of these people come from rich families. Oh, I bought this car using forex. Forex, I bought this Lamborghini with my forex trading. Yeah, right. Yeah, for sure, P2P. Yeah, P2P trading is the best, man. I love P2P. It's so convenient. It's so fast. I bought this car here. He's got a small loan from my father. He bought me this whip. Let's see. All right, let's see. German 40. German 40 is on its way up. It's still distributing quite nicely from this area. Actually, all the way from down here, there's this massive distribution. So we have range high right over here. Got range high. You got another area right over here. So you have price break above, came back in. A little bit of drawdown on that. But German 40 is still quite respectful. The drawdown was only about maybe 9 pips. And this was that area broke out from. You see, I'm not cherry picking. There's nothing else here. That's just price moving and swinging. So if you look at it, there's nothing else. These are just swings. Those are just swings, right? You can see it. This is an area of structure right over here. That's an area of structure right over here. Correct? Price broke above. Here, price broke above. And it's currently in that distribution phase right now. It's heading towards the upside. There's Goldie is breaking into a range. Not exactly sure why, because we don't have any news today. We had a lot of activity throughout Asia. Could be the reason. A lot of sell-offs throughout Asia. So maybe the volume could be breaking a sideways channel right now as we kind of get ready for the next explosive movement. which is about to come in soon. You can see like we still didn't break the highs. By a 1 minute candle closed above, but it still couldn't break. Even the next candle didn't even attempt to break or re-break the previous candle highs right here once it closed above that previous resistance on the 1 minute. But in any case, like that was also the 5 minute closure, but you see it still didn't break. And that's why it's usually nice for that shotgun entry model to have a wick, because no wick, no breadcrumbs, no trail for this guy to see and use as a range to continue through that direction. That's typically what would happen when there's no wick. You can expect those type of pullbacks. Even if it breaks and pushes up a bit, you could still expect the candlestick to still come back down. It just reduces the probability a little bit. Unless it's an accumulation break, then you don't really need the top wick, because that is just signaling a lot of volume in the market. So you don't need a top wick at that point, because now it's taken base off of a breakout. It still seems to me that price doesn't want to sell off really, because of the way it's chopping and the way it's breaking the minor accumulations. I got one right here as well. Got one here, got one here. It's more breaking towards the upside, the up direction, than it is the lower sides. So it is definitely showing us a lot more bullish momentum. At least for the session, even though we want to see more sells. It's literally like yesterday. Slowly but surely moving up. I'm not messing around with gold today. Was able to reduce my stops almost 50%. Amazing. Yeah, good on risk management. Good on risk management. Correlation between German 40 and gold? No correlation. It's just good for diversity. But yeah, there's no correlation there. I'm thinking to open a grocery shop with some profit money. Is that a good idea? If you don't know anything about the grocery shop business, it's not a good idea. Don't get into business of things that you don't understand. You know, just try and learn about it if you still want to. But take it slow and just really get all the information you can. But I wouldn't get into businesses I don't know much about. Like, people are gonna think like, a lot of people get like, you know, one thing people like to do is get into the restaurant business. But they wouldn't know anything about cooking food, about getting fresh produce, about all of these things like storage. And, you know, there are very many things you have to consider. Like also with groceries, like storing it and having your supplier. You gotta look at your demand and supply and all of these things. Making sure they're reliable, get good prices. It's not a joke of business. So if you get into business, like that's going to be your child. So you have to really understand the everything about it, the ins and outs of it. Like you see trading, man, trading's like my child. Nobody does trading better than me. That's how I like to think about it. Nobody knows trading better than me, can read the 1 minute time frame better than me. Like this is what I do, and I'm quite confident in what it is that I do. I can comfortably say the way I trade is very, very explosive in terms of the growth that's available. You know, some people, they don't see the exponential. When they see a trade fail or pass, or let's say they see something like this, like only push about, let's say they can say only 26 pips, so they kind of like have a short-sightedness of what is actually capable in the way that we do things, in the way that we focus on percentage gains, in the way that we trade specific instruments and how we do it, and how we use things like very little drawdown to our advantage to get stronger P&Ls. There's a lot of things that kind of go over people's head to the kind of opportunity that there is with such a system like that. Because it's a system where you're going to know if you're right or wrong quite quickly, but not detrimentally. And if you have a bit of patience, then I think, you know, you're going to get the results that you want to see. But that's the important thing about entrepreneurship. You have to be having that foresight. So if you want to get into the grocery business, do you have that foresight about your competitors and what kind of sharks there are in the water? I have a friend who owns a restaurant. He's always saying he has no life. Yeah, restaurant business can be quite taxing. It is no joke. Like, even if you look at someone like Gordon Ramsay, right? Would you say Gordon Ramsay is a good chef? Or is he a good businessman? Because we all know Gordon Ramsay because, come on, it's Gordon Ramsay, right? You watch all his TV shows and everything like that. So is he a good chef? Or is he a good marketing chef? You know, the victors are going to be the ones who write history. So it doesn't matter if Gordon Ramsay is not that much of a great chef. There can be loads of great chefs out there. But Gordon Ramsay is really good at portraying himself as a great chef. So, you know, in that effect, we all look at him as a great freaking chef. But in reality, he could just be a guy who's really good at running a restaurant business. Right? So you also have to have that elevated thinking now when it comes to opening businesses and entrepreneurship. Like, don't take everything for like a kind of like a face value. No doubt he's a great chef, but he's also a really good marketing chef. He's the go-to guy. He's really good at what he does. And through the marketing, I mean, yeah. Through the marketing, he's able to become better. It's just the same way as through the live streams, I'm able also to become better as a trader. The fact that I'm doing this in front of people now, it's pushed me in a certain way. So, you know, you can cook, but doing it like this is different. It pushes you. That's why they say if you want to go far, you have to go with people. If you want to go fast, you're going to go alone. But I think it's only that journey when you go with people that you always get better when you're going with people. You get to a certain point where it's like you can't do it yourself, right? You have to be willing to let go of something to get better. Even let's say if you got a lot of money, right? If you have a lot of money and you want to put yourself in an upper echelon of banking, you have to be willing to seize some control to gain back control. Correct? Because those upper echelon banking might not be as secure as a traditional banking. But for you to get to the next level, you have to seize some of that control. It's the same way like Elon Musk, he has all this money, but it's not like he controls all the money. He has to see some of that control of the money that he owns so he can actually grow it. Correct? So there's always a barrier in life that you're going to get to where you're going to need to work with people. So I think, yeah, in that regard, like live streaming has just been amazing. It's shown me a different side of conviction that I had already in myself. So I think all that we have to do now is just keep focusing on the craft and stay humble, and that's it. Stay humble and see what else you can improve daily. High investment, low margin, time consuming, energy consuming. Yeah, exactly. See, like Gordon Ramsay does, he has his restaurant. He's really good at probably trading his chefs and everything, but he wouldn't be at the restaurant. So now that's running on autopilot for him, right? So now he just focuses on his TV shows, and that drives traffic to his restaurant. So he's also knowing that business, so it's like a lot more easier for him. But for a lot of people, it's going to be quite challenging. And this guy started from the gutter, you know? Like, he's been through the trials and tribulations of what it takes to run a restaurant. I think if you're opening a grocery business, it would be nice if you had some of that experience too. Because you're dealing with food. But anyway, let's see what Goldie is doing. We have a small little break. No, this is German 40. Yeah, Goldie's just ranging. Goldie is ranging. Not necessarily Ragnar. Groceries might be cheaper, but it's riskier because produce goes bad. Yes. Jewelry is a good business. It might be a bit expensive to start now, but metals are safe most of the time. You never go wrong with investing in something like gold. The only tricky thing with like stuff like, if you notice in jewelry shops, they wouldn't sell obviously kilos. Also, if you're buying gold, it's a lot harder to get rid of a kilo than it is to get rid of a gram, a troy ounce. So even if you get gold for wealth preservation purposes, it's always pays to get the smaller amounts than rather just a whole brick, because you wouldn't just unload a whole brick at a dealer, a whole kilo. Love listening to you. Oh, from Kenya. Welcome, welcome, Eunice. Shout out to Kenya in the chat. How realistic is it to grow $1,000 account to 1K with 1 to 2% risk, especially for one starting out? Right now, the account is just a 1,300. I think the best way that you're gonna do that is if you're risking. Let me show you. I think the best way you're gonna do that is if you're risking and compounding. If you're risking, let's say 5% a trade, but not only with your trading profit that you're growing the account, but to compound it with your salary. Right? So risk 5% of 1,000, and then when you get to 1,500, risk 1% of 1,500, and so on and so forth. When you get to 2,000, risk 5% of 2,000, and every time you're above the milestone, you keep risking the same 5% of 2,000. If 2,000 comes down to 1,500, then you have to go back to the 5% of 1,500. Like something like that, correct? So it's not you're taking too big of a hits during drawdown periods. And when you're above 2K, just keep risking 5% of 2K. And you gotta have to compound that as well. And then I think it's gonna be very possible. You compound it with your salary, put like as much of that salary as you can possibly do, and you will get to 10K in, or you should rather be able to get to 10K quite fast, depending on your strategy, how you trade, your results, what you're capable of doing so far. Even on a demo account or a $500 account, like what kind of percentage gains can you realistically see using your system? And then you can like kind of see how long it's going to take you to get to that amount. But you're not going to gamble your way there. At that point, you might as well just donate the money to me. I can give you like my PayPal, and then you can just send me the money. But you gotta have to go on education first and get educated, because then the doors open. Then you have a lot more options, right? Not only compounding your salary, even if you have $1,000, you could still invest in a funded program, and that funded program would be a stepping stone to growing a personal account. Then you have a lot more options. But I was just explaining to you like the way I would do it without the funded program approach. Yeah, this is quite rangy. We have a demand, so this becomes a whole demand, and this is the supply area here. So we're gonna label this Q. This is a massive accumulation. You got the range low, which is, if you actually break the range low, you have a clean traffic down over here for price to keep moving towards support. That's going to be about 68 pips. And this is actually a really nice PA, because you have to imagine this, right? The whole world is looking at this right now. The whole world is looking at the same exact 5-minute candlestick right over here. And what are we all looking at? We can all see that price is moving sideways, correct? Like if you're going to take like a random trade here, this is going to be 50-50, whether it's going to move up or whether it's going to move down, mind you. But what happens when you have a candlestick do something like this? Let's say if it reflips, and what happens when the price action starts to look like this, correct? The whole world sees that. And what happens is we should be getting orders coming in. You have sell orders here below 49.14, and then you should get at least like some kind of a push towards the downside. Correct? This is an area where you're gonna have a lot of risk on in a situation like this down over here, because you're getting a variable shift with structure, just the same way as if we start breaking above the high, above 49.30. It's a pretty obvious move, but given the type of volume that we're seeing today, I feel like even if it did want to fake out, it would probably give you like 20-30 pips before pulling back down like that. And that's all that you actually need, like 20-30 pips. You don't need these home runs all the time. As I said, it's a lot harder to be right in the market. You can't be right all. It's a lot harder. The end goal is money. Are you making money or not? You know, that's the end goal. Try not to be right, because being right will cost you more. So you see, like for this trade, took a sell over here. Did it continue moving down? No. Did it have to? It didn't. It didn't have to. We just need to be right for 1, 2, 3 minutes. For maybe around 3 minutes, we had to be right. That's all that we had to do. Because the market will always rebalance. In the long run, you'll have a lot more trades rebalance than just continue in your direction, like flawlessly. Right? It will always attempt to rebalance, and then that's when people get the struggle of trading here, is usually during the rebalancing. Having a bigger stop loss is not the solution to that, because even, let's say if you had even a bigger stop loss, this for demonstration purposes, but trust me, it works just the same way with more examples. But if you had a bigger stop loss, sometimes it's still even depending on what kind of risk reward that you're looking for, sometimes it's not going to be a good solution. Like the market will, even if it comes like this and comes down, you always find another way to rebalance you out of the position like that. I hope that makes sense, because there's always a point in a trader's journey where we keep thinking the stop loss is a problem, so we keep adjusting. I don't know if you all have experienced this part of it yet, but there's a point where you keep making the stop slightly bigger and bigger and bigger, and then you see that the TP part of it now is also suffering. By the stop loss, you're surviving your trades a bit longer, but the TP part is also suffering before it comes back to your entries or hitting your stop loss again. There's always like a balancing, it's a balancing act between the SL and the TP. So it's quite important to look at your system and see what fits that system perfectly. You see, for like the way we trade, 16-20 pips. That's all we need. Even if we don't have structure, it will fit the system and the model that we're trading. It doesn't need a wider stop. Like it's breaking out right here as well. Might see some sell-offs coming in, some selling pressure. That starts to break. Let's see, we're getting a strong break. We need a strong break. It needs to re-break that wick. Still a pretty small break. Got like 25 seconds. I wonder if it's got to break through. But you got to see for your system what your system needs. Not what you want, but what it needs. Because you might want a tight stop loss for some system that you have. But what it needs is a big stop loss. What a poor break. Barely even broke the lows. What platform do I recommend? I don't hear people talking much about FTMO nowadays, but I still think FTMO is quite a reliable prop firm. But I really don't hear people speak about it. I'm not a prop firm expert by any means. But I feel like FTMO should be... So it's got a 4.9 review over here. So it doesn't look like anything happened to it. Let's see. What can we get nowadays? We got US dollar. Let's click OK. So you get a 100k account for 439 euros. Sheesh. This 439 euro, man, I use like 500 euro to last me 6 months. You're gonna spend 500 here to... No, actually 500 euro lasts me way more than 6 months. I always added more capital in, but it for me it seemed like it lasted a year. But I always slowly added capital in, and I always kept my risk very low, 1% or even less, most times 0.5%. And the whole idea was to make that last. So if you're taking the other route, now you're risking almost 500 euro, the same amount that I used to last me a whole year to learn how to trade. But like that was a base, that was a principle. I always added a little bit more in because I was obviously losing still. But at the same time, I would have winning days, kind of balance it out to give me more time to learn. Because from the get-go, it's always been 1 to 2 trades. Because I was fortunate enough to get a mentor at an earlier stage to teach me about the importance of losing slow. So, you know, for a beginner, securing that 1-to-1 is going to be your bread and butter to keep you going, right? So it lasts a lot longer. But here, what a lot more people are doing instead is investing 500 euro for a one-time pony, a one-trick pony type of show thing where you're going to lose that account and then that's it. Then you're already paying a tuition fees, which is much higher than you should be anyway. So prop firms are not a great area to learn how to trade. You know, it's not great because you're at risk of losing it all much faster. But let's see, 50k, you got a 50k account, $345. $10,000 account. Maybe because people don't like FTMO, it's probably expensive compared to what else is available, but at least they're reliable. Let's see, max daily loss 5%, max loss 10%. Pretty standard. Minimum trading days. Unlimited trading period. Refund. Profit target. And I think they have the same rule. They don't have like consistency rules and that sort of thing. Because you see, nowadays the prop firms are always changing their rules like literally every month. But it feels like so far FTMO has kept it. They've kept it clean. They've kept it the same, right? It's still 5%. Daily drawdown, max percent, 10% loss. Profit target FTMO challenge is set at 10%. Yeah, 10% profit target. They've kept it the same, which is actually good to see. So what does that mean about all these other prop firms who say that consistency rule and all these other rules are there to actually support you? Like, what's the point of that then? They're just trying to make it harder for you to lose. I think like FTMO already understands that if you're profitable, you're profitable. If you're not, you're not. So they've kept the rules basically the same, correct? Let me read the chat. FTMO is a prop firm of forex. Oh yeah, maybe. But you still trade commodities though. You can trade gold. I like FTMO. No consistency rule is a big deal because that's one of the other props used to take your account away. Yeah, I feel like they've kept it OG. It doesn't seem like they've changed anything over here. So I would recommend something like this. All the other ones with these rules are just basically lying to you. The problem is the channels with more influence are not going to tell you that. Right? You're only going to have a smaller channel like mine, like tell you the truth. But when you go on these channels, 100k people, 100k subscribers, 1 million subscribers, they're going to tell you the opposite. They're going to tell you, no, this is good for you. You should do this. And at the same time, click the link in the description. They make like 5,000. If I'm going to be honest with you guys, I've had those offers as well. They make $5,000 or $10,000 like as a payslip on top of their affiliate marketing. That's how much the companies will pay them monthly. You got a big audience. I've had similar offers like this before in the past, but as you can see, I don't liaise with any of these companies because I trade. That's what I do. And we share information over here that provides value to people that they can learn how to trade. But it is a free bag. They get paid like $5,000 or $10,000 monthly. And on top of their affiliate stuff, when they click on the links, etc., etc., because everybody's losing anyway, they're gonna make like upwards of hundreds of thousands of dollars even, because I have really major audiences. So I don't know, can you blame them? It's free money. Most people don't want to listen anyway. You're gonna tell people to study and do what they need to do, but most people, they just don't listen anyway. So I kind of understand that part of it, because I've been doing this now for live streaming for a while now, and there's only a small percentage of people who actually like put in the effort and want to take it to the next level. Not a lot of people do that. So to play the devil's advocate, I do see that kind of uphill battle that can be between getting a free bag here or staying somewhat neutral and really trying to push this side of it, knowing very well that 90% of your audience will not want to take that journey the way it should be taken, with actual grit, not get rich fast. But too many people are focused on get rich fast, which is unfortunate because they're missing out on a skill which is quite useful. But it's a universe. Some people, they're gonna protect the system. Like if you know like in the Matrix, when Neo's getting told that the system will try and protect itself. Because some people in the system, you can't break them out of the Matrix. Not everybody wants to be broken out of the Matrix. Most people are going to protect the system. Nice little breakout, but it did actually what it did happen here. It did a liquidity grab. So it looks like this was not as forgiving, but it did, let's see on the break, it did around how many pips? Like shy of 16 pips. We did about 14 pips. Looks like the true trade came in for the buy over there. Push out like 24.8 pips. It's all stuck within this range though, however. But I think for the buyers, they had a nice little liquidity grab confluence. Although they are counter trending, they did have the nice little liquidity grab confluence here. Break of the highs, move up about 24.8 pips. Big start trading props until they ban you. Entire business model thrives when every trader loses. Basically casino. I mentioned it's like being in the NBA before you earn your right to be in the NBA. The pressure gets to you. But once you earn your spot in the NBA, it's just like normal. Because a lot of people like to make excuses. Like, for example, they could even say stuff like commission. Oh, you know, you're going to pay commission with your trading account and all of these things. But commission is not a reason why you're not making money. Let's be honest. If you're profitable, you're profitable. The fact that you're paying a certain commission is not the reason that you're not making money. Sometimes we just have to be very honest with ourselves. In the prop space, just like anything else, you get what you paid for. Yes, exactly. Oh, what do you think about trading as a loop between profit and losses? They call it a zero sum game. And when they say it's a zero sum game, it means somebody has to lose to win. Right? So that's generally what it means. But of course, there's always one person winning more than losing. Because you will lose in trading, but it depends on like the type of results that you bring anyway at the end of the day. For a lot of people, it's a zero sum game because if you look at the general population of people, like the way they look at trading is always to get rich fast. So they're always doing things like over trading, over risking. Yeah, you're using statistics from people who don't know anything about trading, which is just the vast majority of people who come into it for the first time. They say in 90 days, 90% of traders lose 90% of their account, you know, but it's all turning back into like education. That's all it is. Like what kind of education it is that you're getting about the industry. And there's a lot more misinformation than there is like information that can actually help you succeed slowly. The thing is, you want to succeed slowly, right? So you got to focus on the people who preach these things. And again, it always ties back to your ability to judge character and your ability to do due diligence, because you are in an industry that requires a lot of due diligence, correct? Like, don't get it twisted. It requires a lot of diligence. I know sometimes you look at a guy like Mamba FX and he looks like really funny and you think that it's just a game. You know, it's not a game. It's not going to be as easy as you think it is. Sometimes people make it look easy, but the reality, it's not that easy. It's just people who are really good at what they do, they're just able to make it look easy. So at least if you understand that part, then you have nothing to worry about. Because now you know what you need to do and what you need to focus on and what you shouldn't be focusing on. I think the future will belong to consumer quantum computing trading, but that's only a matter of buying the computer. They're already selling quantum computers to colleges. I've started trading with smaller live accounts. I've lost the first account and I'm on my second account. Break even after I've added 20% at first. I'm only using consolidation setup. If you're in the mentorship, you can contact me directly if you need any assistance. But if you're not in the mentorship, then you know, you can just post a chart over here and we're just gonna look at your chart. Didn't get my sell entry. I wanted pre-London, saw some buys play out, so gave it a shot with London still moving up. Rocket to 32 pips. There's a shotgun with break and retest prior range, kiss of death and SMA cross. 5-minute candle opened without a bottom wick, expecting some volume once the break of the high. Possible liquidity grab and rejection of the 5-minute SMA. Very good. Break of the high. Secured something. The good thing about this trade is you weren't greedy and you secured something, because you see what happened here? Came back into drawdown. Let's see, TP 32 pip hit as per my broker with SL at break even. I was willing to take the chance. Oh, nice. Yeah, this one came in earlier. I can see this one a bit more clearly. You have that liquidity grab below, break of the highs. TP 32 pips hit my broker, entry break of structure, sell at break even. Yeah, I think it's very nice over here. Probably moved up a little quick, huh? Or maybe you got big spreads, either one. You should turn on your go on your settings and turn on the ask and bid. Turn on the ask price over here, so you're always gonna be able to see the spread. Because sometimes you could be trading, you could be taking a trade, and for whatever reason your spread could be all the way down over here and you wouldn't even know it until you executed. And you're gonna wonder why you got slippage. So turn on your ask price, so you can always see the spread. That's gonna be that's hazard. You're trading without the. It's like you're driving a car here without the necessary headlights. Yeah, you don't got the necessary headlights, so that's what you're doing, you know. Maybe one headlight is broken, so you can still drive, okay, but one headlight is broken. You need that ask line in there. Nice little break. This is a sell-off during the Asia, I think it was. Look at that beautiful entry. Beautiful distribution to the downside. Awesome. See, 16p pips. Oh, 16p stop. Forgot to take a before pick. Oh, very nice. Very nice, very nice. Those are the types of trades. Those are the bread and butters right there. Let's see, this was yesterday. Oh, Kevja, no trade today. I knew today was going to give you a bit of a run for your money, but I thought you would get the buys at least. Kevja's been taking the same trades I've been taking somehow. I thought he was going to get the buys this morning. What happened? You're locked in? Gotta lock in, sir. Buys this morning you would have caught. I have no doubt that you would have caught the buys this morning. I have no doubt about that. Yeah, but this is super range bound right now. This is we got a little bit of fake out, a little small distribution, but back into the accumulation. This minor little accumulation right over here. So let's see on the break. We had how many pips? About like 24 pips. Nice liquidity grab below. But you see, this is the overall market condition now that you're trading in. So it mustn't be ignored, because for a fact you're within a range and you're not trending. No trades today. Why not? Did you not see it? Did you not see it this morning? What happened? That was a good one. You could have caught it. Oh, because of the daily bias maybe. Maybe daily bias scared you out of it. Yeah, okay, so we're breaking the lows now. Look at this, distributing to the downside. We're starting to break the lows. It's starting to move down. Tom, can we see a follow through? That was quite a big spike though. That minute candle, it moved down in like a second. I just saw it on my MetaTrader. This thing just disappeared and then reappeared. Down over here, it just moved down really, really fast. But it's attempting to break out of the range. Can we see a continuation of the sellers over here? We got the selling pressure. We're wondering where all these sellers are hiding here, Tom. Can we get them back into the market? Eventually, we do have to... Oh man, what a pullback. What a strong pullback that was. Eventually, we do have to need to move from this region. And it will be better for price if it moved from this region than just got stuck within that range, correct? Because not so appetizing to trade something like that's moving so rangy as it is to trade something that, let's say, is flowing, right? Flowing towards certain direction like this. But this is the inception. This is the point A right now. You see, Viral Boss told you to take a buy. He said long. Trust me. So that's why you have to send a chart. Viral Boss, you got to send us a chart over here, so we can see what your idea is instead of just saying go long. Yeah, you wanted to have a sell? Me too. I wanted to have a sell at first, but the way it was progressing kind of made me... Because, you know, with the pre-session, you can get away. Like this, the daily bias pre-session doesn't really matter that much. It's just good to be on the side of it, but it's not really as important as it is for maybe a different time. So initially I wanted the sell, but I did not get the sell. I wanted it to break like here by 48.83, but instead it ended up going up with volume as well. Started going up here, breaking 48.97. But yeah, it's always safer to consider the daily bias though. You're being like cautious. That viral guy was probably full margin. This is trying to liquidate some possible stops. The way it came down so aggressively. Typically also the way you get entered into a trade matters. You know, like if a trade just, especially if it's coming from far, to break an area like this, it's not as appetizing as if it gradually came down, because that could be a liquidity grab. But if it gradually comes down like this, creates out structure as it moves down to break the lows, that's a lot more interesting, right? It's a lot more fresh. But if it's just gonna appear from here and then come, this already moved as well. How many pips is that? Like 52 pips. It's just not as appetizing as a trade to take. It's a small nuance thing that I think can make a huge difference if you are looking for an A+ type of a setup, rather than just leaving your trade and that's what it is. Because that's what a lot of people do, you know, like with a lot of systems, they kind of like draw a zone and then they're gonna leave their trade, and then it is what it is. They just leave it there and anything can happen, and they're just gonna let it get hit like this. But how it comes into the zone is quite important. That's why sometimes, like on breakouts, I'll avoid a breakout. Let's say this is a 1 minute breakout, and then a candlestick, let's say, did this. Okay, it's still a breakout. And then let's say the next candle doesn't break out and it does this. At that point, I'm not even looking to take it anymore, because I know when this one breaks out, yeah, sure, it can keep playing, but the way it came towards it showed me that it was in this scenario would be reducing in volume, as opposed to if you just got a candlestick, just break out all in one go like this, right? That's a lot more convincing. The market's more convinced in this scenario that it wants to move in that direction, rather than it hesitating towards a level or quickly coming towards a level like in this scenario. So you see, they're kind of nuanced things that you also have to understand. Like in trading, it's not just one system, like 1 + 1 = 2 all the time. It's also just the way you come to that like calculation that also is important. You see, now this is looking like a really fat liquidity grab below 49.14. Quickly wiped out some orders back into the range. Remember, it's still not going anywhere. It's just showing a potential direction of where it wants to go to next. But it's still within the range. Accumulation Nation. This would have been actually really good. Like if it followed through, this would have been a very nice trade because of the overall bearishness that we're getting in the market from the Asia. But this thing is about to explode. Whatever direction. It still has clean range if it wants to move up. 223 pips. Dang, I got out, finally making it to BE for the day to see they want to have it long. There's a beautiful thing about even yesterday. You see, yesterday I started off my day with a loss, but since I still have capacity in terms of my daily percentage risk, on my next trade, all I gotta do is risk, instead of 1%, 2%, and I was able to end the day in blues. So that's the edge that I use, as opposed to just taking too many trades. But now, because you know, you feel like you're just fighting your way back to break even, or you're fighting your way back to a sudden result. But I get it, like everybody trades a bit differently, but yeah, that's just how I think makes the most sense for me. So I don't have to fight or get involved as much. And like one loss in the morning, Give myself another chance within my daily percentage risk on my next trade. Worst case scenario, I lose. I'm still in my daily percentage risk. Base case scenario, I make back the loss and they're profitable. So I think you're always gonna play with your risk. You always gotta play with your risk. Because look, you can't control risk to reward. That's the market, right? The market determines how good the trade's gonna be, reward-wise. But what you can't control is your risk. Always focus on what you can control. Let's see what this is. What you sending here, Ricardo? A Russian soldier lies flat on the ground as drone drops a grenade. Damn. But you know, this is very sad because I think what the guy is just exhausted. Then he locks eyes with the drone above, waiting to see if it drops another. It's not even that he's brave or calm or anything. I think the guy is just freaking exhausted. That's wild though. Just got another fakie above the highs. Holy. Let's see, was a break above the highs forgiving? See how forgiving that was. I think it did at least a BE. Yeah, it was like 14 pips again. How much was it right here? This is around 10 pips, 10.8. What was that, 5 minute? Just got one 5-minute candle just move all the way up there. How much was that the break? Oh shit, it already moved like 124 pips. It's a pretty big movement for a 5-minute candle. Last time, I think it was last week, we took a buy on gold. And the 5-minute candle had moved up about like 80 pips. And then it pushed an additional 30 pips. Additional 30 pips. I think that was last week on stream. We took a buy like that. It's kind of a scary situation to be in when the 5-minute already moves so much. But yeah, in that scenario, you know, we still took the trade. But I guess in this scenario, it moved up already 120. That's another thing about breakouts is pay attention to the 5-minute closes. Really important over there. 5-minute closes and yeah, I think that's it. That's mainly the key time frame to look at. It's 5 minute. 5 minute for breakouts. In terms of freshness of the move. Have you heard about the Russian guy in Kenya? Yes. Yeah, I saw it on TikTok. It's tragic. 2 countries are fighting for dirt. Damn, that's a stop out for me. Only 50%. Though, so we good. Thoughts on silver? Looks at the same movement on gold for you. Let's see. Yeah, I think silver is looking like not exactly the same as gold. See, gold is in accumulation. Silver on the 5-minute. Sure, we got like a support, but definitely a little bit different. Silver is also down how much is that? 3.57%. Gold is down 1.33%. Silver on the daily is cooking up. Like the whole market is cooking up, chat. Like at this moment, let me actually see what gold is doing on the higher time frames. I haven't looked at it in a minute. Let's see. Monthly time frame is consolidating still. It's still cooking up over here. You can see it's a doji candlestick. Naked charts, remember? Massive naked charts. You know, these indicators, these order flow indicators and everything else, they're just additional, right? All you see are candles. Always just remember that. All you see are candlesticks. If you can't read candles, you can't trade. You gotta tattoo that on your forehead. If you can't read candlesticks, you can't trade. Just always remember that. Like order flow and all of these things, just, you know, gonna leave that for the institutions. You're a retail trader. It doesn't matter what PD arrays, what inverted unicorns you're using, what smart language that you're gonna use. You're a retail trader. If you go to an institution and start talking about PD arrays and these $100 softwares that you're using, man, they're gonna laugh at you. They're gonna say, look at this idiot over here. He's a retail trader talking about YouTube shit that he's getting off YouTube. Man, some people are gonna even use the trading view volume indicator. If you've ever seen that trading view volume indicator that comes at the bottom, this bullshit over here that comes at the bottom when you first start trading on TradingView, man, this is all just getting its information from the candlesticks, you know? So don't get it twisted. You can never trade at those levels unless you are at those levels. Stay on your lane. You are a retail trader. Okay? I know some people are gonna make it seem like so smart, but it's really just bullshit. You are a retail trader. There's no single YouTuber who's gonna talk to you about super advanced smart money concepts. You know, they're just good at reading price action. Even the #1 scalper, right? He has his software, but guess what? He has a software he's selling to you. That's the difference. He's not using a volume indicator he's buying from somewhere else. The #1 trader in the world, he already knows how to trade. So he has a software to help you trade, maybe similar like the way he knows how to read candlesticks, but it's his software to sell to you. That's what I'm saying. If you can't read candles, you can't trade. People are just making extra money for themselves here off the dumb shit. Off the dumb shit people think. You know, but if that guy was honest, he would tell you that you need to at least understand what you're doing first before using indicators. Right? Because even in a situation like this, the indicator is not going to save you. If market is not moving anywhere and you cannot differentiate between a consolidating market and a trending market, you're doomed from the get-go. Because the indicators don't move the market. The market moves based off of how it moves. And you wouldn't know the outcome of the trade until after you're stuck in. Right? And then you let it play out. So it's not also going to show you anything special. You still have to take the risk, and it still will be a risk that you'll take. And the important thing is, instead of an indicator, that you're going to have data like this. This is more solid, right? So when you look at something like this, you're like, okay, I know the probability of when I just take this next trade. That's all it is. It's all just a probability. I know the probability when I take this next trade, what kind of a result I can expect from that next trade. Not, oh, if this ball here goes to be bigger ball, then that means something. No, you got to look at your data and see what is your data telling you, because this is going to be what's going to be replicated moving forward. Right? So indicator can't do that work for you. Just learn how to read price action, get your journal, and start journaling your trades. 1 to 3 trades a day, looking at this, and that's it. That's how you're going to be able to deal with the psychological times when you're not confident about a trade. Like, for example, today, I was not confident, to be honest, about this trade. I was maybe 70% confident because I know it could have looked a little bit nicer. But then you always reminding yourself, follow the data. Follow the results. Because remember, the human psychology is not built for trading. It will keep you away from doing what you need to do. Because trading is something like you're jumping off a cliff every day. That's how I would describe trading to somebody. So if you're the type of person who's going to like go to the edge of the cliff and then start thinking about whether you're going to jump, You're going to have these other traders. They're going to come. You're going to be still sitting on the edge of the cliff, but they're going to be jumping in because they trust the system. They know the cliff and they know where they're going to land and they know the risk that they're taking. Right? So that's a kind of a confidence that you build through collecting data. You trade your own capital? If yes, how much? And is that, how much is that? And what platform? You know, the thing is, like, if you're going to consider yourself a trader, man, you should be able to do at least some kind of a due diligence. I don't know how long you've been using YouTube for, but in the description box, there are going to be links with nicely labeled. Over there, you can see my spreadsheet. You can see the percentage gains of my trades. You can click on the links. You can go onto Discord. It'll take you onto, if you click on that link, it will take you here. It will show you how much money I made. And then you can reverse engineer that to figure out the account size that I'm trading. It's not rocket science. All the information is out here. But I appreciate the engagement. At least for YouTube, you know, that pretty much helps my channel that you write something. But at the end of the day, I want better for you. I want better for you. I appreciate you writing and continue to write because there's no dumb questions or anything like that. But I just want better for you. I just want better for you. You know, you got to figure this out. Like every day I post my trades. If not on the Discord, I'm posting it on the YouTube channel, on the Reels and the community text posts. So it's all available. It just requires, you know, a bit of commitment. Not watching like it's Netflix. Not watching only when the YouTube algorithm will show it to you on your homepage. You know, it just requires a bit of commitment to become good at trading. Like if you want to trade the way I trade, you know, just give yourself like a quarter. If you're super new to trading and it feels a bit confusing, because for a new trader, this might all seem a bit confusing, then take the necessary steps to get to this level. And what you can do is you can go on babypips.com, and that's the best place to start. By the time you're done with babypips.com, this is all going to be much more understandable what's going on here. Just a bit of organization. Take it easy. Don't rush. Don't rush, my friend. Don't rush. Enjoy the journey. Enjoy the process. Yeah, this is a small account of 1 billion. $1 billion. I saw Raja take a trade the other day and he's like, yeah, I'm just gonna risk $10,000 on this trade. I'm like, damn, $10,000? Bro, trading millions. $1 million. He made like a million on one trade. Like, damn, Raja. Flexing on us too much. $1 million trade. $10,000 trades like it's nothing. Just $10,000. But you know, he's an old man now. Raja's going into his 15th year of trading. Maybe like even more. He's been in the game for quite a long time. I've been in the game for 5 years. And honestly, he doesn't even need to do that, what he's doing nowadays with those trades. It doesn't make sense at a certain point to still be trading. You're gonna invest that money in a bank that's gonna give you returns, and you're gonna live a quite comfortable life, you know, that you don't have to do anything. But he's trading like a gamble. You know, when people got a lot of money, they're gonna gamble. So for him, a trading account's like a gambling account now. That's what I noticed. So he just waits for news, or every now and then he's taking like a trade, but you don't need to at a certain level. You're not going to be trading at certain level. You're going to trade a bit differently as well. That's why he only trusts his own broker to put $1 million in his own broker. Or you're gonna go, but there's different levels to this shit. Like, I gotta admit, like Logan Paul puts $1 million in poly markets. That's how much Logan Paul bets on poly markets. So definitely different levels to this. But your goal is not to compare yourself with other people. Your goal is to look at your life for what it is and what you need to be comfortable, and just block out all the noise and just focus on that. Because for some people, even making $50 is pretty good. Like if you make like $500 a week, $50, you know, just look at that aspect of it as well. I know I'm going to teach my kid how to trade. That's going to be an extra money that he can make. And for him, $50 would be quite a lot. And then he just gets better. As the account grows, then you earn more. Because the goal is to grow the account. It's not to get low risk, high reward all the time. Poly markets is crazy. People betting Jesus will return before GTA 6. Easy money. Easy. I think it's at it's slightly above a 1-to-1 even on that. You can't get up every day just to do nothing. I respect Raja is doing what he loves. Yeah, exactly. You can't get up every day and do nothing. That's true. You can't do nothing. Starting to break up now. We got a small little shotgun in motion. Now it's breaking again. Highs. Oh, that break was a little bit more forgiving. Yeah, about like 20 pips off the rip. These first two breakouts are actually all fake outs. You got one fake out that happened below there, and you got another fake out that happened above here. But now the third attempt seems to be more of the genuine break. What time is it? 5. Oh, it's now 5 a.m. Eastern. Yeah, still going to mop up this range. Oh, Lee.
Why are you running? Why are you running?
Why are you running? How much did we peak? 71. Still filling up the range. See, this is the whole idea here, right? Like, nonetheless, the way it did the breakout was a bit dirty because it did fake out a few times. It did give a couple of whips, but the market was eventually going to distribute, right? It was going to eventually move from this area with volume. It always matters like how it also does it. So in this specific context, it did make it difficult, unless for XY reasons you came in a bit later or was able to avoid the first two breaks. But yeah, I think this was definitely the main breakout as it's trying to head out. But that was already pushed around 71 pips. And you can just really see and sense that feeling of the market loves to accumulate like this and then distribute, right? So that's one thing that we've seen happen, and it's a very tangible thing that we can study about the markets. It loves to accumulate orders, and then when it distributes and breaks key areas, it will push. And remember, this happens on this right as a 5-minute. This can happen on the weekly, on the monthly, and all the way down to the 1-minute chart in smaller instances, such as what we had even happen right over there. Right, so that's basically the same thing that's happening on the largest time scale, like what happened right here, and then boom. Right, so when we see that, we're like, wow, you know, so this is quite interesting. So what players are the ones doing this? What players are the ones making money here? Okay, then you got to ask yourself, like, who are the guys making money over here? Who are the guys trading those types of systems? And scalping has actually gone quite popular. It's a lot more popular nowadays than something like swing trading, because swing trading has come with a lot of risks involved. Like, even from an institutional standpoint, swing trading has come with a lot of risks and uncertainty in the markets generally, because, you know, they trade a lot more than just gold and the dollar, so they have to consider a lot more correlations, and there's been a lot more instability and uncertainty. So scalping and like hyper scalping and, you know, just in and out type of trading has become really popular over the years, for those reasons. I'm in a sell from 37. Oh, nice. Yeah, very nice. You got a John Wick entry over here. Because it's a lot easier to be right about the market in a short duration than it is in a long duration, which I think also makes sense, correct? Right, write a 1 in the chat if you agree. Write a 2 in the chat if you don't agree. That it's safer to be in the market for a short duration than a long duration. Write a 1 if you agree. Write a 2 if you disagree. That's a very popular opinion, that it's safer to be in the long term. It's also very popular. It comes from your understanding of risk and what it is you're trying to achieve. Like Warren Buffett will tell you it's better to be in the long run, right? But see, Warren Buffett is a different kind of a market participant. But at least for a lot of our retail traders, I think in the short term, it's a lot safer, because you see, like intraday trading or day trading. As I said, day trading is more of like a riskier endeavor because of these types of pullbacks. You see, like, okay, it broke out, awesome, it did 70 pips, but you see what it's doing again? It's starting to come back down again. So that's the noise and the fluctuation that you deal with as a day trader, and that's what the higher time frame and position traders look at day trading. That's their perspective of what it is, which is, they are correct, but these are also people who just never were able to day trade. So for them, they were able to swing trade, and then it becomes like something that you say that lower time frames are more choppy, but it's just because of their experience as well. So they're not wrong, they're correct, but they just couldn't do it themselves, which they should add as a disclaimer that I couldn't do it myself. For me, I couldn't swing trade. So I tried swing trading a lot in the beginning, it wouldn't work for me because I'm a day trader and I had to deal with these fluctuations. Like swing trading in terms of holding positions just throughout the day and not the week. Because, you know, you're going to learn really slow if you're learning from one trade for a whole week. Could you imagine like how long it's going to take you to learn? It's going to take you so long to learn. 100% I have to swing approach my prop accounts due to spread. Yeah, with prop accounts, you need a fatter stop loss. But you can still manage your risk. That's a good thing. You can still close a position. Like if you got a fat stop loss on an accumulation break, but you full port it, you can still close your trade if it breaks the structure that it's not meant to break. But you just have a bigger stop loss. So much swings and emotions compared to 20. Yes, so much swings. Because you see now, even a situation like this, yeah, this already pushed up quite significantly, 70 pips. But if you're looking to just take this thing the whole way up, because some people will be looking at this as a breakout, maybe they would even have a stop loss all the way there. And for them, it would just still be the beginning, correct? So they will be like still waiting for this distribution here to follow through. And they would have to have a bigger stop loss to avoid any possible fluctuations. But at the same time, it's a lot more difficult than this trade. We could have taken 16 pip stop loss in and out. Because then at the end of the day, it's either you're going to make like 500 there on that 16 pip stop or like even 20 pip stop loss, or you're going to make the same 500 here. The money is not going to discriminate. 500 with a scalp and 500 with a swing is still 500. Yeah, but the only thing is you're still going to take longer for your trade to play out. So which one is better? In my opinion, I feel like the scalp gives you more freedom. The swing, let's be honest, a lot of people are going to swing trade. They won't have the capacity to deal with the fluctuations as much. And always going to be looking at their phones. And always got to worry about red folders. So if, like for today, we don't have any folder news. So we're pretty much in the clear. Today, we don't have anything. So, you know, you can trade your swing trade without worrying much. But tomorrow, you're going to have FOMC, meeting minutes. That's coming towards the end of the day anyway. But then other days, you're going to have unemployment claims at the New York Open. They're going to have all these other things to consider. It's crazy how smart the market is. Yes. And you only truly start to realize that like after your first market cycle. You only truly, you look at markets like, it's kind of like an organism, right? Like it has a certain behavior. It's definitely not random. And obviously it's because humans at the end of the day are making some of these plays. Like they're making these plays. Like there's a reason why we break areas and price behaves the way it behaves. Like beautiful clean ranges here. See how like this range here got mopped up nicely. Price came down. Carry resistance. Resistance started breaking. Those are the best type of runner trades. I don't think I held a run on that one though. But those are the best running trades. Price came down. Boom. Created that structure. Then broke. See how beautifully filled up the range. And look, as soon as it hit the range, then it had the rejection. So as you can see, like these repetitive behavior, like if you look at this model over here, so you're going to look at from here to here, and then you kind of like ignore everything else back over here. So this is something that if you're even patient enough to wait for certain setups like this, man, those are really good setups. So you know the buy happened, because I know it looks kind of small on your screen, but the buy happened like right here, and then you got resistance right over here. So you're gonna have the arrows like this. Boom, boom. Best type of setup. Very clean. And you know the same thing, look at this right over here, from here to here. So now you're gonna take a sell. Let's say boom, arrow here, out here. You see how the range got mopped up and how that range got mopped up. Very nice confluence in there too. You got like little fake out situation that happened above, right over here. Little head and shoulders, not perfect, but could have been. But a little bit more of a liquidity grab at profit taking to break the lows to come down. Very nice PA. Very nice PA. We haven't had that in the London session yet this week. London has been slightly a bit different this week so far. Hey Lasha, hey Tetra, hey guys, good luck today. Luck? Is there? You know, the truth is, there's no difference. Actually, at the end of it, you get lucky or you trader. Trader, luck. We create our own luck, but I believe luck does play a role. It does somehow. I don't know, do you get lucky? You don't get lucky because you put yourself in the position to get lucky. So yeah, you create your own luck. Because you wouldn't take the lucky trades, in quotation, if you didn't have data for why you would take those quote unquote lucky trades, correct? You wouldn't be in that area in the first place. I just saw it in a... I'm watching this series called The Industry, and it's about traders. And this guy made... I think he made 20 million in a trade. And then his colleagues were like, man, you got lucky. Then he said, is there really a difference between being a trader and getting lucky? But yeah, I think there is definitely, because you still have to execute. You still have to take the risk, put yourself in that lucky position and get it from a point of data. Because also when he made the 20 million, he did it from a point of information. So he was not gambling. So I think that's the difference. Gambling is different. Gambling is another form of luck, which is, let's just say, gambling. But we don't look at trading as gambling. Although you could make an argument for it, it's just not the case. Because we have to execute from a point of information. Whereas when you gamble, you don't have a point of information. You're just kind of like spinning a wheel on a slot machine or just playing cards. Yeah, but thank you. Bro said good luck and I went on a rant. Like, shut up, Vic. I'm up, lads. Alright, man. Enjoy your New Year's. Enjoy. Happy New Year. Probably gonna see some fireworks today as well, where I live. Most likely. Actually, I saw fireworks yesterday. Maybe that's why. I saw fireworks yesterday, and I think they're already kind of gearing up for the Chinese New Year. We're gonna see some more fireworks today. See, so people make some money here on this move, but now it's just question of how correct can you be? You know, it's pushed like 72 pips, but now it's coming back into the range right over here. So how correct can you truly be? And remember, this happens on the lower and higher time frames. So keep in mind this could be on the 1 minute. It's the same trade that we took down here. It's the same thing we took here, but you know, the shorter duration. So you can imagine, but obviously that one pushed a lot more, but it's kind of the same thing. You know, you take a profit and then it goes back up. So that's what I mean, like you cannot avoid price action. Higher time frame, lower time frame, you still get the same sauce. You see, it's coming in again. You still get the same sauce. But you know, once you fully conceptualize that, I think, you know, that's a pretty good elevation that you're going to make for your trading career. Once you understand that concept, that you cannot avoid anything. If you still think you can, you can't. You have to be able to read price. So that's why I strongly recommend people who are learning to trade to start on the lower time frame and build that experience a lot faster. Because that same knowledge you'll apply to the higher time frame. And that's the same knowledge we use to call out things like Bitcoin, for example. Before Bitcoin did its initial rally over here when it started breaking above 30K. What's the difference? What's the difference between what I'm showing you now? Don't fight it. Don't fight TFX concepts. You know, don't fight it. Don't run back to your ICT communities. Don't fight it, because it is there and it is present, and we are present. We are in the market. You know, we are in the market. You see, it's the same thing that happened here, but you see, it didn't give that follow through. But what's the difference in structure? There's really not much of a difference. This is a weekly time frame. If you didn't have the time frames, you wouldn't even know. Correct? You see this? The same thing. The same thing. Now, what's the difference that made this follow through till here and this to come back into the range? It's not the higher time frame that the higher time frame is safe. It's just about the market environment and the catalysts at play that could help facilitate the move up. So in this scenario, if you're keeping up with the news here, let's say you could do your due diligence, go back to October 23rd and see what the case of cryptocurrency sentiments were during that time. You know, because there's a time also Trump was really supporting cryptos and all of these things, and different time, different catalysts that helped that move break above. But you see, this was a point A, so technically you will be able to read with the price action where the entry is going to be. And then you see, it's a skill that you're going to apply to all manner time frames, all instruments. See over here, you got another pause, then continuation, then a bunch of choppiness, but then eventually continue to the upside right over there as well. See, you got some people run away to the ICT community again. They said, no, the only way to trade is ICT. He built the system and the algorithm. You're lying to me. But that's what we do in this channel. We bust bubbles and we try and elevate your thinking about markets beyond what's trending on your discovery page. Because at the end of the day, that elevation is what gets you to the next level. But we are back into the gulag. This was a beautiful also distribution here, but I had like a fake out first. We initially thought it was going to break above here. But it looks like that was a liquidity grab instead. But it pushed about... I think it was on the daily. Yeah, but it was much higher time frame, but it did... You can see the liquidity grab better on the weekly time frame though. Right over here, broke above the highs, but it did like a decent size push. But usually in the crypto space, people are looking to long for a longer duration, so they get washed out like this. And you see the market is so it's so like, it didn't have to do this, but I knew if it did this, it would have more orders in here. So it can be very, very freaking Judas. It can be such a Judas sometimes. Let's just say that. So that's why it's really important to always look at your risk factor. To always look and see like how can you lose less in your trade and throughout the day. Throughout the day, take less trades, spread out the odds. Trade by trade basis, make sure you're sticking within maybe, you know, 1 or 2% per trade. You can risk more on trades you feel more confident about, and you can risk less on trades you feel less confident about. And that's what you can control. But yeah, now we're back into the we are definitely back into the range. So we just got a broader fake out here, back into the range. So far this week, Goldie has been performing decent enough, but definitely a lot more choppy than the previous week. And we're on a Tuesday over here, and we still got Wednesday, Thursday, Friday. So don't ruin it. Don't revenge trade. If you're taking one loss for the day and you're at your daily loss limit, just call it a day. Come back tomorrow. Because remember, that's your advantage as a retail trader. That's your edge. The fact that you don't have to always be involved. You know, hedge funds and institutions, they're always got to be involved. That's why it's called a hedge fund. They're always going to be in the market, so in some shape or form. You don't have to be. So use that and play that as a strength, rather than thinking of it as a weakness that you don't have the tools necessary to compete with the smart money guys, because you can't compete with them. So use the tools that you have available to yourself and use that as your edge. Correct? You're a smaller guy, so smaller guys, they're much faster, they're more flexible, but you're not gonna approach a bigger guy and try to beat the bigger guy with the same kind of like approach as if you're fighting at the same level. So you gotta use your advantages. Like if you watch WWE, remember that fighter Rey Mysterio? Man, how sick was Rey Mysterio? He was so small, you know? But that was the fun part about using it. So you use Rey Mysterio against the Big Show. You're not trying to carry the Big Show, because he won't carry you. He's just gonna look at you while you're trying to carry him. But man, you can wrap around his neck. You can throw him. You can do a lot to him using your size. You can go under his legs. You know what I mean? So that's what you are. That's what you gotta think about. That's what we all are. All retail traders. And that's what we use to our advantage to get the P&L gains that we seek. This is it. This is like, this is a mark in the end. The best tactic to use when it comes to SMC in trading is the liquidity grabs. The liquidity grabs are brilliant because you can see them, right? Because again, it's like the wicks, and the wicks don't lie, right? So if you have like a bunch of wicks at a zone, that's gonna be like rejection. That's gonna be a clear rejection of the area. And if you just have one long wick, that provides an opportunity for a potential wick fill, right? So you probably heard this concept before, but they do work. You have wick fills, you got rejections, and then you got like things like that, like liquidity grabs over here, and those work beautifully. Good old days. Remember Eddie Guerrero? Yeah, that was awesome times. New 4-hour coming for gold. Yeah, we got a... It could also be a potential break-in or retest here. Oh, in the 4-hour. If it continues to move down... Because we're still below this level. So this candle here would be flipping. We would still be respecting this. But, you know, the new 4 hours is about to come in about 16 minutes. But the idea would be like, it would continue to respect that level. And then reflip. Get like, this is more of, I think this is more of like, I look at this more of like a wick fill. To break, to continue to move down. That's what I think the 4-hour would look like. If the 4-hour looks like that, then you want to definitely be looking for more sell opportunities on gold. So we're about to get a new 4-hour candle. So remember, this is quite an important zone. See if we're going to respect this area here on the 4-hour, and you're going to see next candlesticks start to move down like this. I still think that gold spot is more bearish. It's still bearish on the daily time frame as well. Still down 1.43%. So once we get down below this certain area here, start respecting it, we would probably see a little bit more cleaner follow through on the LTF. Because you see right now it's kind of like in a standstill here. We're still kind of waiting to see if we can get the selling pressure from this previous action from the Asia right over here. So then that would just be like a much larger type of liquidity grab that happened here. You see the 4-hour here about to close. This could actually be quite interesting. You might see gold just tumble here today. I think that would also make sense with just the way the overall structure looks. So yeah, still pay attention to this accumulation, because that's still pretty valid area of price action, right? It's still very important, this zone. Because if we're not breaking back above, because now we have to break above resistance by 49.36, keep moving up. If we start breaking down below this area over here, I believe we can see some stronger pushes, some much cleaner follow-throughs. Because it can only fake out so many times. Eventually, it would need to properly leave this whole zone. So as you can see, it's not as forgiving, because we're just generally talking about the PA right now. Faked out here once, faked out here once, played out here once. So now it's going to be quite interesting to see if we re-break the lows, whether that's going to just distribute or if it's going to fake out again. But I think, you know, the key thing here is timing. And we're about to go into the pre-New York session in about like 15 minutes. So that should increase the probability that will that next time it breaks, that it's just gonna break clean. All right, it's just gonna break clean. So it's just the same idea from the trade yesterday. At the different time is a higher probability that you're gonna get a cleaner follow through. So yeah, it's something to look out for as we're approaching pre-New York into New York Open. How prices are gonna distribute from this area. Let's see, German 40. German 40 is setting up also pretty nice here. Candle is about to close in 4 minutes. It looks like it's got some nice clean range to the downside as well. Daily time frame is neutral. So we don't have a daily bias on the German 40. You have about like 46 pips down below here. This price breaks below 24,810. So you see German 40 has just been distributing all morning, right? We had this area over here and it's just been playing out the whole morning. Now it's setting up again for maybe a correction as we go into pre-New York. Wie geht's dir? Bin gut. Ich bin gut. Yeah, I think let's see what's gonna happen here. Let's read some news. India likely to keep gold out of trade deal with Gulf bloc. We did not include it in the trade deal with Osman, so it's likely boring. Nothing interesting there. Gold imports jumps in January. Swiss UAE inflows lead spike. Gold imports jumped in January after cooling in December, led to a surge in shipments from key bullion hubs such as Switzerland and the UAE. Oh, okay, Goldie's coming down. It's starting to come down. But the good thing about gold is you can actually, we're still inside this range, but just for to keep the chart work clean, we're focusing on what's currently happening right now. So it could still like fake out here, distribute below the range low by 49.13, but this is definitely the new PA that's been formed. Right, this new PA that's been formed right over here. So it's good. You see it's opening up a bit more. It's breathing a bit more and price action is moving a lot better. So yeah, we are kind of in that accumulation, but not really, right? Because this is more of a unique moment in the market right here. So if price breaks above this high, that resistance by 49.26, you can anticipate that we're going to retest 49.36 over there. The high, the resistance, correct? And if it breaks below that low, you can anticipate that this was a much larger fake out and that price can continue to move down with this bearish momentum right over here. Bearish momentum, break of the lows, accumulation, manipulation, distribution, or create a support at demand, re-break the high, minor resistance. It's like a minor resistance. That's like a major resistance. To break the minor resistance and then come retest the major resistance. Yes, sir. So thank you all for tuning into this London session live stream over here. And remember to leave a like, tell your friends about it, tell everybody you know about it, post it on your channels. And oh, look at this, price is starting to break over here. And I will see you all tomorrow for London Open. So adios. Love you guys. See you. Take care.
Now we bout to dip. My boy said to stay.